time now for our business news, and we are starting with the restructuring of an entertainment giant. Disney says it's going to be cutting 7,000 jobs in a bid to cut costs. Charles Pellegrin, our business editor, is here to tell us all about that.
Yeah, the company's plan is to reduce spending by about $5.5 billion, which includes a, quote, significant transformation, according to Chief Executive Bob Iger. Cutting 3.6% of the company's workforce is part of that drive to make its streaming business profitable. The latest earnings report showing it made a loss of $1.1 billion. Now, Bob Iger's plans for the company after his return at the helm in November were eagerly awaited. He replaced his designated successor, Bob Chapek, after he was dismissed by the board because of the losses in the streaming business caused by a rush to increase the number of subscribers during the pandemic. Iger was immediately put under pressure by activist investor Nelson Peltz, who criticized how the company was run and is seeking a seat on the board. The company's restructuring will also involve dividing it in 3 separate units, one for the profitable parks business, another for entertainment, and a third for the ESPN sports television unit, which many investors believe could be spinned off.
I think for Disney now, it's really trying to have a successful streaming strategy with content that's rationalized, making sure the parks don't suffer because that is the cash cow business. And also ultimately, activism is swirling around Disney. And I think Iger and the board are well aware of that. And that's why you need to do things like this to make everyone happy, because the walls could start to cave in pretty close here.
And now to the ongoing race to develop an AI-powered search bot, following in the footsteps of Microsoft and its ChatGPT-powered Bing, unveiled at an event in Washington State on Tuesday. Google made its own presentation in Paris on Wednesday, but the event disappointed with only minor updates to its search engine and no clear date as to when its own search bot, Bard, will be launched. The disappointment adding to the fact that experts pointed out a mistake that Bard made in its online demonstration video on Monday. This then leading to fears about the likelihood of misinformation spreading through AI. Well, as a result, Alphabet, Google's parent company, saw its stock fall almost 8% at the close on Wall Street, wiping billions of dollars off its market value. Consumer prices in Germany grew at an annual rate of 9.2% in January. Those the harmonized European figures. That's less than what was expected, even if it is still 0.5% higher than for December. Analysts explain the figure by the fact that energy prices are slightly easing. Inflation, excluding volatile energy and food prices, should remain high, however. Let's move on to the markets now. The main European indices opening the session higher this Thursday. As you can see, the FTSE in London up 0.4%. The Paris CAC 40 up almost 1%. Same for the DAX in Frankfurt. And we're seeing mixed trading in Asia as investors there are ruminating over the possibility of further interest rate hikes. The Nikkei in Tokyo closing the session down 0.10%. The Hang Seng in Hong Kong, though, closing the session over 1.5%. On the back of good performances from the tech sector. Alibaba, for instance, launching its own AI search bot. And now to Japan, where still AI robots could soon, by this spring even, begin taking over the tasks of delivering food or parcels on the country's roads. A development that could help the nation's economy by solving the labor shortage issue. Solange Mougin has more.
This is Deli Row. Launched some 2 years ago by the firm ZMP, the delivery robot with its big expressive eyes is soon to be rolling around the streets of Japan.
Ours are self-supporting robots that can safely move away from obstacles, recognize traffic lights, and make other decisions on their own. Our robots are self-reliant, and the remote operator just monitors them.
Come this April, with a revision of Japan's traffic laws, robots like Deli Row or Panasonic's Hokobo robot will begin making deliveries, selling food, and simply roaming at a max speed of 6 kilometers an hour.
One of the issues we at Panasonic recognize in Japan is the shortage of workers. Because of the pandemic, there has been a rising demand for online shopping. Delivery workers are not able to keep up.
Robotics firms hope the machines will be able to help with the labor crunch. For by 2030, Japan's aging population, some 30% of citizens are over 65, means that there'll be a shortfall of over 10 million workers. That's 15% of the overall workforce. But this doesn't mean that robots will soon be taking over most jobs, at least anytime soon.
I think society has huge expectations for robots, but there's only so much robots can do. And even the simplest of tasks performed by humans can be difficult for robots to emulate.
Delivery robots have already been launched in the UK and in China. In Japan, the rollout is expected to be a gradual one, to get people familiar with these newcomers to society.
That's it for the business news, Sharon.
Thank you for that, Charles. That's Charles Pellegrin, our business editor.